Hey guys, SGT here, and with silver blowing the doors off $31 an ounce on Friday and gold nearing $1,700, I wanted to get our good friend John, the Doc from SilverDoctors on the line to help us break down the action. Doc, welcome.
Thanks, John. It's a pleasure to be here.
Well, it's a pleasure to have you. Hey, first I want to set the stage for folks. I know we can't get into details about order size here, but the SilverDoctors received a large order for physical silver recently, and I mean a large order, 7 figures. And you have an interesting story to tell related to the acquisition of that metal. Can you just tell folks briefly about that?
Yeah, we've looking into making a large physical purchase for some clients, and essentially we've been trying to. We contacted Scotiabank up in Canada, and they essentially tried to talk us out of the physical purchase and essentially advised us that large, wealthy clients should not be investing in physical silver, and the market's too small for them. Essentially, we should advise our clients to invest their funds elsewhere.
Well, John, when you shared that with me, it really didn't come as any huge surprise because Scotiabank, for any of us who've been paying attention for a few years, knows that they are just as criminal as the rest of the international banks. And if anybody wants to see an interesting video about Scotiabank, just Google Scotiabank puts woman through hell to get her silver, which is a piece that I did going back to 2010. These guys don't want anybody to take physical silver, John, because they don't have any in the vaults.
Right, and I've actually heard secondhand recently, in the last few weeks, Andrew McGuire over in London has assisted a large client with acquiring a large silver order. We're talking like 5 to 10 million ounces. It was sourced through Scotiabank, and Andrew McGuire has said that it appears that all of the silver was sourced from the SLV once it was delivered from Scotia.
Yeah, well, let's talk a little bit about what's happening in the physical markets right now. You can talk from personal experience. We can talk big picture. I think we should hit a little bit on Bill Murphy's prediction. Bill Murphy is really somebody I ought to get on the line again soon to congratulate him on his call for August, in which he said big moves were coming for silver and gold in August. And here we are with August absolutely blowing the doors off and people really being astounded at the move we've seen in both silver and gold. You guys have a piece out called "The Forces Coming into the Gold and Silver Market Are Tremendous." And why don't you talk a little bit about that?
Sure. That article was written by one of SilverDoctors contributors, SRS Rocco, and essentially the forces in the silver market, beyond everyone likes to focus on quantitative easing and Bernanke printing and stimulus, but gold and silver had almost a decade of bull market runs prior to the first dose of QE in early 2009. So gold and silver don't need QE to continue to bull run. Yes, I think QE is going to increase. It's going to come. But their entire bull markets aren't just based on QE. That article you referenced, essentially SRS Rocco makes the point for peak silver being reached, and the fact that the energy supply, the fact that it's going to have on the silver market, and basically the physical forces coming down on the silver market are much greater influence over the gold and silver price over the next 3 to 5 years than even the monetary stimulus, as amazing as that might seem.
Well, it makes perfect sense for those of us paying attention to what's going on in the physical markets. We know that in order for gold and silver to go to heights that are really unimaginable, we just need to see this paper manipulation stop. But in addition to that, we know that silver on the periodic table of elements is predicted as being the first precious metal, the first metal to really become extinct. And what Rocco is saying here is essentially that silver mining production is declining at a fairly staggering pace, which plays right into that thought. And he says, and I quote, "These physical forces coming down on the future silver supply are really going to make the price of silver head up to levels no one can imagine." And guys, that's paper silver manipulation aside. This is just the facts of the matter. Physical silver in the ground is super rare and super hard to come by.
Right, and we've had a correction over the last 12 to 15 months. So one would expect mining companies to be currently producing or going through their high-grade ore right now while the price is low, But the astonishing thing is almost all of the mining companies, their ore grades are declining exponentially right now when you would expect them to be mining more of their high-grade material.
Yeah, and, for those of us who have any mining stocks, there's definitely people in the camp that hate them, and I understand that. I happen to be one of the guys that owns physical and some mining stocks. We've been getting crushed in these things because of the paper manipulation of the precious metals prices, and the fact that silver production and gold production, it's just a hardcore intensive, capital intensive business. It's not easy to pull this stuff out of the ground. Anybody that's watched the History Channel shows about, mining for gold and mining for silver knows this is just not an easy business. The other business that's not easy is selling the physical stuff. Why did you guys get into selling physical metals, and how do you deal with the hedging on that? It's really just beyond my ability to understand when you're only making 3, 4, 5% or whatever it is per ounce. Your margins are so slim. How do you hedge against these gigantic moves? Like on Friday, we saw silver up $1 or better, and how do you plan for that? How do you maintain a business in that type of environment, John?
It's hard to maintain a business when, rather than looking at fundamentals, you're trying to outguess the Fed and Bernanke and what they're going to do. So it's almost like playing poker with a business. But as far as the business, and it'd be nice if we made 3 to 7% margins. We operated at the bullion and closer probably to 0.5% to 1% margin. We started it kind of for the dual purpose and goal of we wanted to provide our readers at SilverDoctors with the closest thing to wholesale pricing that a retail customer could obtain, and also we wanted to basically provide a legitimate revenue stream for us that we could focus our entire time and efforts on SilverDoctors site. So that's kind of how it got started. But yes, as you mentioned, it's hard to run a business in today's environment when you're worried more about the central planners and what they will or won't say on a certain day than you are your customers and gaining business. So it requires being nimble on your feet, making good predictions, responding instantly to what the cartel does. It's not easy, but we enjoy the challenge.
Well, let's talk a little bit about the cartel. Let's talk about Bernanke on Friday. What did you make of what was said? Not much was said. I like to say that Bernanke is in a tightly wrapped box. He really can't say that we're ready to turn loose QE3 because it would literally slay the dollar. It's the last bullet in the chamber. They need to continue to just kind of plod along and say, we're ready to act, and then not say QE3. What's your take? Because we're seeing gold and silver vault higher as though he said QE3 is starting now.
Sure. My take is that as long as they can continue to goose the market by promising QE, what's the point of actually doing everything? As long as basically right now we have verbal QE that they're just moping the market. I think we sold off initially because all the algos read through the speech and there's no QE announcement, so everybody sells. And then 10, 15 minutes later, once all the humans actually get through the 5,000-word document, everybody realizes that he's essentially promising to do whatever it takes. QE3 is imminent. The Wall Street Journal releases a report saying QE3 is imminent. Market Watch releases a report saying that. So it's the game they're playing, and frankly, it's pretty much what I expected. That, like as I mentioned, if you're able to gun the market higher just with words, there's really no need to actually release your big bazooka. We'll keep that in the back pocket until one night when it's actually absolutely necessary to prevent a financial Armageddon on a Monday morning or a Sunday night Asian Open.
Let's talk now a little bit about financial Armageddon. There's a lot of talk that the end is very near, and there's signs that something catastrophic could be happening in September, October, November, right in this fall time period. I hope that doesn't happen. I hope that we're all able to have a pleasant Christmas with our families as we move into 2013, which is assuredly coming. I can assure everyone December 21st, life will go on as normal if there hasn't been an economic collapse. What are you seeing? Because what I'm seeing is a Federal Reserve and guys like Jim Rickards say, you know what, everything's fine. The Fed has plenty of ammo to play with as they do Operation Twist, but they've sold most of their short Treasury exposure, and they're the only buyers of the 30-year, and they're completely running out of ammo as we just hit a $16 trillion national debt, and we're just in a lot of trouble. I mean, that's the reality. What do you see as the reality, and are you predicting a collapse in the short term, mid-term, long term?
As far as the long term, I don't think there's any question that running $1.5 trillion deficits is unsustainable, and running $10 trillion overall unfunded liability deficits annually is unsustainable. So in the long term, yeah, it's unsustainable. We're headed to perdition or Armageddon, whatever you want to call it. All you have to do is look at the value of the $20 gold coin from 1930 versus a $20 bill from then. I mean, 97% of its value has been inflated away, and I expect another 97% will be inflated away in the next coming years. As far as this September, October, sure, there's the potential. Don't discount also the cartel's ability to prolong the collapse and the crisis and kick the can further down the road. I honestly think that the situation will come to a head further once the European debt crisis is resolved. At that point, the crisis will then shift, and everyone's attentions will shift to the UK and the US. So I think Europe is really what will determine when the crisis happens, and whether that's resolved one way or another, whether they have a breakup and Greece and Spain are kicked out, or whether they finally can announce a huge, who knows, €5 trillion bailout. But once the euro crisis is resolved and traders can then shift their attention to the U.S., I think that's when we'll have a more severe or drastic crisis here in the U.S.
Yeah, I agree with you. I mean, all eyes are on the Eurozone, but we're seeing news from Zero Hedge and others that Bankia is going to need a bailout immediately as bad loans jump 44%. Bankia is Spain's biggest bank. It's just a basket case. But that's true with all of these international banks. So many of the banks in the Eurozone are even in worse shape than these pathetic walking dead zombie banks here in this country. I think the chances are, in my opinion, and I want to get your take on this, John, is that we're going to see a collapse of the Eurozone and the Eurozone banks, and then that disease, that infection, that virus will trickle down, the dominoes will fall, and it's going to directly hit our banks, especially if we see the euro itself fall and all the credit default swaps come due. It's a hot potato, and ultimately it's not one that can be passed around forever.
No, definitely not, and you're exactly right. Once a few or even one of the key large European banks go down, it likely could topple the rest of the UK and US banks, or at least a few of them, overnight or even within hours. The banking system is so intertwined with derivatives and credit default swaps. So yeah, I think that's definitely coming. As far as timing of it, could happen Monday. It could happen another 3 to 6 months. So kind of hard to put a short-term time call on it, but I definitely agree that is likely coming.
Yeah, and as Pastor Lindsey Williams has been warning for so many years, really, and now you look back and with hindsight, you can say, well, what a great call, but there was a time, 3 years ago, when Lindsey Williams would say, prepare, because when you see the Eurozone fall, when you see the euro collapse, you're going to have a week or two at most to make preparations. That wasn't so easy to see then, but it's easy to see now, isn't it?
Yeah, I don't think you even have a week or two to make preparations. I think you may have a few hours.
Yeah, I think you're right. John, before we let you go, do you have any final words for folks as they're trying to prepare? And, this collapse could come really at any time. What are you seeing in the physical markets as the price rises? Are you seeing more orders and more interest? Because that's kind of contrary. You'd think people would want to buy when it's cheap, but they tend to chase it, don't they?
Yeah, they definitely tend to chase the market. The higher the price goes, the busier SD Billion's phone lines get. But in the overall picture, $31, $32 silver, that's still barely, if you look at like a long-term 5-year chart, we're still almost at a bottom versus 2011 highs near 50. So it's still an excellent entry point. And personally, I believe that people that enter the market now in the low 30s, in another 3 to 5 years, they'll be very thankful they did. You mentioned that Bill Murphy had called for big moves in August. We haven't seen anything yet in the gold and silver markets. We had a long consolidation from bouncing off lows near really 27 to 28 in silver. So a move from 27 to 32, percentage-wise, we're about up 15%, but really the silver move is just getting started. And now that we're through Jackson Hole, I see silver continuing to move. Once it really gets through 32.50, it's going to move to 35 pretty quickly, and if 35 is taken out, that's going to trigger a whole bunch of stop losses, and we're going to be right back at 40 in a flash. So, like you said, there's going to be a lot of people that are right now sitting on the sidelines waiting for another retest of 26.27, feeling like they missed the boat, but all those people are going to be buying back in at 38, 39, 40, and 45. So, personally, we're still, in the big scheme of things, close to a bottom. I still think it's an excellent entry point for silver as well as gold physical position.
And because you are so into the stuff, you sell it. I have my personal favorites when it comes to buying bullion. I really like to stick with government-issued coins because I think they're so pretty, and I'm always happy to spend the extra couple, $3 per ounce to get those, be it Silver Eagles, Canadian Maples, or the products from the Perth Mint. What's your take? What type of silver do you like to personally own? You into bars? You into coins?
Personally, I think my favorite is the 90% silver coins. It's a government-issued coin, like you said, but it's also one of the lowest premium products, and it's also fractional. So if we ever do have a situation where silver is remonetized or is used as barter, there's no real other inexpensive way to own fractional, like quarter ounce, half ounce, 10th ounce pieces. So that's my personal favorite. I own a little of everything personally: bars, 1 ounce rounds, Eagles, Maple, 90%. But for the most part, I try to stick with the 90%. I think that's the best buy for your money, and it is a government-issued coin as well.
And Doc, remind people, how do they find you online?
We're at SilverDoctors.com. SD Bullion, we'll be launching actually a bullion website, kind of like the online retailers like APMEX in the next month or two. That'll be sdbullion.com. For now, we can take your order just by phone only at 614-300-1094.
All right, very good. John, the doc from Silver Doctors, thanks so much for your time. We really appreciate it.
My pleasure, Sean. Take care and have a great weekend.
All right, John, you too. We'll talk to you soon.
Thanks so much for watching, and please check out my new website, thelibertymill.com. Real news from the very best websites in the world, 24/7. Thanks for watching.